So within the next year or so, there might well be a profit-taking zone for you to get out of this market with a lot more profit than what you started with. Now, it's very subjective, I know. You need to bear with me with this because timeframes and data and information is going to be thrown at you to give you a base case. Now, if for some reason this video comes back around in 6 to 12 months time, it may already be lost. If you are in this market right now and you are buying your bags and you are accumulating, you may well be in for a bit of a shock if history repeats with a 4-year cycle. Let's look into it. Before we get going, it would be nice if you subscribe to the channel. Look at how when price action does its thing, the market just brings you people because everyone's going berserk for the market. And I think we're going to get that surge again. I really do, because I think you'll see throughout this video what's coming. It's interesting, right? So yeah, if you like this stuff, leave a like. Let me know in the comments if you want me to do live content. I am debating doing one live stream a week just to mix things up a little bit. But let's get into it, because as much as the thumbnail and the title is all about I'm going to sell my bags at certain points, there really is a point in the market where we need to look and be like, okay, 6 to 9 months, if we are much, much higher, we really should be considering taking something off the table, because I think, in my opinion, we're early. If you've been persevering with this market and doing very well, and you've bought as low as you can, you need to reward yourself, because I think if this video comes floating back around, which it has the potential to do it in 9 months' time if the market goes crazy again, and we're going to talk about certain triggers to look for, which you can't not skip ahead because that's kind of the obvious point here. Stuff like this on the screen is huge, right? If Harris does win, I'm not really politically minded in America, I don't really care. But ideally, I want whoever to win to be interested in digital currencies. I want them to continue the growth that we've had. I think when you go back 3 years ago in the US, you would have been like, oh my God, why would you want to be an American with crypto? It is horrible. It's changed massively since then, right? So this is potentially huge. A tech-friendly, woohoo, AI, woohoo, crypto, yay. All of that would be really, really positive. However, it's early days, so let's not get too excited about it. However, that being said, this kind of element around it to build the economy, to bring in the layers, all this innovation, all that kind of stuff. I wish the UK would do something like this. The UK are about to do a government policy kind of revamp of budgets, and they're going to announce some of it today by the sounds of it at a conference. It feels like they're going to kill everything because they do not understand it. If you're in the UK, you'll know the pain. Anyways, for me being obvious in terms of this, it's good. The previous or the current regime right now in terms of policy has been really positive for crypto over the last couple of years. I just hope it continues. I really do. Moving on to policy, again, we have got the SEC has greenlit potentially here the ETF for BlackRock, the IBIT, shares for futures, the futures market, which is big, by the way. So when you think about people and understanding that they may well want to have some exposure to Bitcoin to make money, and in the options market, it could be relatively huge because it kind of allows them to bypass a lot of the problems, right? Which is good, i.e. skill, wallets, transfers, holding, whatever. So this could be pretty big. It's early, I know, but these key amendments will allow certain things to happen to potentially allow it to go ahead. And this is like options on IBIT will be physically settled and feature American-style exercise offering a hedge for investors looking to manage Bitcoin-related risks. The ETF, which tracks the price of Bitcoin, has attracted significant attention for both retail and institutional investment since the launch earlier this year, becoming the most liquid Bitcoin-related product in the US market. This could be very interesting to see who would want to be a part of it. So yeah, follow the leader sort of thing again. Now, we've had interest rate cuts. I know it's fun to speculate, and I know most analysts were wrong. I myself was thinking 25 basis points, and I put a video on recently saying that, well, I think the Fed have got it wrong. They should have done 25 basis points in July. They didn't, did they? No. So they should have done that. Altcoins have surged, leaving Bitcoin and Ethereum behind. Kind of ish. Not really strictly true, though, is it? I know this article's a little bit late in the game, but Bitcoin has been okay. Ethereum had to bounce because it was doing awful. And altcoins have not really done much. Even this here, right, is saying that like, yeah, it's rose by 4.4%, which is total 3. When you put that as a slash BTC pair, it's hardly even moved a nugget yet. So you're still early, don't worry. You're not going to the moon just yet without your bags packed. I think we are still a little bit on the point of, well, if you are buying over the last 6 months, now, today, whatever, you may well be pretty happy with your position. If, trigger word, I know, if, could, maybe, this is the start of a change in the character of the market and we start ramping up, which is actually pretty possible. So we're going to be somewhat careful. As I've alluded to it though, I think this article is a little bit falsely kind of premise, and it's kind of there to get the eyeballs of the retail in because, well, the alt season market hasn't really started yet, and we are gearing up. And as much as I've been talking about it, we are about to start, and we need to be early with this. You need to start to look at certain things, and this is why you need to look at certain charts. If you go back to my previous video where I talk about the total 3/BTC, we'll go back to it. It's hugely important to understand that a lot of altcoins, as you can see on the screen here, are still well below Bitcoin. Big coins as well. Big coins. Even BNB. BNB is one to look out for, by the way, because of retail sentiment. And CZ is out of prison in 6 days' time. You know, so certain things may well be happening, right? So just be mindful of it. The final thing to look at in terms of the BTC side of it before I start talking about other stuff is the obvious. We need the inflows from BlackRock to continue and to come back. But overall, in the grand scheme of things are still looking pretty good. This is the ETF flows looking relatively strong. Yeah, money's still there, still looking good. So can't really grumble too much. If you want to join my private community, feel free, Patreon. It's only £5 if you want to get in to watch the videos, or a little bit more to get into the Discord as well. I'm looking to set this up on YouTube as well for the watchers. So if you want the extra videos, I'll put a small fee as an alternative because it's a little bit easier than jumping in Patreon. So we need to talk about the big R word, which is recession. The probability of it is still at, what, 35%. There is an element of a recession by 2025, remains at roughly 45%. Now, obviously, this is all old news based off the rate cuts as well, not kind of somewhat included, right? So as I say, it's old. But the reason why I want to talk about it is because I think a lot of people are getting the wrong end of the stick with this, certainly when it comes to risk assets. Gold, for example. I've talked about it before, how gold rallied in the previous rate cut. We ended up in a recession and things got very interesting before that happened. It rallied up quite high. Bitcoin has never had one before, neither has altcoin markets properly, right? We've never really had a big rate cut neither. We went from 2.5% down to 0.25%. Obviously then COVID happened and all of that. You get the idea. Ended up where we are right now. So stuff like that is interesting. And I think there's a lot of people that have this weird conception, and I'm going to just talk about it out loud because it blows my brains how people think like this. Retail doesn't move the market. That's a simple line of it, right? People seem to think that, oh, because there's a recession, people are like tight and hard up right now and they're tightening their belts. They're not going to invest in cryptocurrency assets. Well, I'm going to just say one thing. Retail are always late to the party. Now, obviously, this recession word scares people, and usually when it's announced, usually already gone and been and gone and do whatever. Now, what will move the market is institutional investment managing their risk. Let's get onto it. Now, if that does happen, we are following the 4-year cycle, and we do get a niggle of employment data looking at recession levels, and we look at elements of uncertainty. We have got an all-time high at the S&P 500, which we'll look at in a minute. People are going to look and go, whoa, what the hell's happening here? But actually, they'll follow the big money. More often than not, and I've alluded to it before with that, that YouTube graphic, when the money comes back, it's because of the big green candles. And often you find that it's retail that do the final push and get then destroyed, right? Which is fine. If Bitcoin replicates what gold did in the previous rate cut, which was to move up before a potential recession, which could, in my opinion, happen in the next coming years. I don't know when, because I'm not a fucking oracle, but we haven't had one since 2008, 2009. That's a long time ago. And the data's not looking great. And we're coming out of a high inflation market. And we've just had QT. There's a lot of factors at play here. So it kind of looks and makes sense in a way that we're going to probably get one at some point in the not too distant future. But what will Bitcoin do? Well, that's the interesting point. Retail will not be a part of that starting phase. Institutions might. They will probably do something nice with it. Hopefully, fingers crossed, because they're looking to save some money and put their money somewhere else. They may want to jump out of property and into Bitcoin, into gold, whatever, as an example, right? Be mindful of people telling you, oh, but people don't have the money, they're not going to invest. Put it this way, they will invest because they did in COVID. They will invest every single time because they want to, people are greedy, they want to make money. If you're stuck here, it's probably because you were greedy at the first point. You know, it happens, right? Now, this is a fantastic little tweet in my opinion. Really nice, clean, love it. This is showcasing the 4-year cycles and where we kind of are, roughly, give or take. We feel, in my opinion, yes, I do agree, we're getting close to that stage where, and you'll see more in more data very, very soon, how timeframes marry up, halving data marries up, and we also get similar sort of corrections. You can see the corrections here. Fundamentals. Bitcoin is stronger than what it has ever been. Institutional investment, the network strength, the hash rate, all that kind of good stuff, and as well as the Bitcoin season. The ecosystem of Bitcoin is getting stronger. You've got runes, you've got ordinals, you've got obviously stacks as well, the layer 2s, all kinds of stuff happening, right? It feels like we are getting pretty close to Q3 ending, obviously, going into a strong Q4, into an election, maybe into that big halving run where supply and demand comes in. And obviously you're seeing Michael Saylor buy up. We've got potential BlackRock buying up even more. We've got all these kind of institutional investments, options, all kinds of stuff happening, which is very, very interesting to note because one catalyst could send it. And once that happens, you're going to get multiple other ones, which is going to create that supply and demand. And then people are just going to look at the market and go, hello, I'm interested. If Bitcoin breaks beyond those all-time highs, I'm talking about it before, $82,000 to $90,000, people are going to look at Bitcoin and go, oh my God. And then the algorithms and social media is just going to go out there and it's going to go crazy. Got to be mindful. One thing that is also crazy is tweets like this. And I agree 100%. Funny how 99% of CT turns bullish. And yes, this is where the problem lies. And it does happen. Hence why we need to talk about, well, you need to get in. You need to be positive and you need to remain in position and not flip-flop between them. And buy solid assets that you feel are fair or low value. We're going to find that tweets like this will be, well, they already are, they always are, right? But you want to also find that, well, actually we are early and it's already happening. So it's interesting. The reason why this tweet is really right is because Bitcoin currently is at levels of resistance and we're still technically in a downtrend. So yeah, spot on. We need to be mindful of that. Now, the main thing we need to talk about is the data, and this is a really good tweet. I'll read it out so you can kind of see. The average Bitcoin cycle starts 170 days after halving and peaks at 480. We are currently 156 days after the halving. Global liquidity is about to spike. Probably, yeah. Central banks are cutting their interest rates. Yes. We are still in QT though. And then you got the election in the US 42 days away. That often creates a little bit of interest. In terms of the graphic, it makes sense in terms of looking at that. I often talk about the first 100 days of halving has been really interesting because we're often the same sort of prices as Bitcoin when it happened, right? It's like, oh, you know, everyone's like, oh yeah, halving, nothing happens, right? Always chill out. Then it starts to ramp up over a 6-month period and we're getting towards that point, right? Now, when we talk about this, and I know it's obvious to talk about, history is great, but what if it's different? There's nothing to tell us at this time is any, you know, there's nothing to tell us that it's not going to be any different, if that makes sense, because the hash rate is good, the difficult adjustment is good, miners are surviving, they're doing really well. You got data like this, you've obviously got what's said on the screen in terms of liquidity rate. You know, you look at the global liquidity, it's still growing. You've got, you know, as I say, interest rate cuts are already happening just about, maybe you should have been a bit quicker on that, but things are looking pretty good, right? In my opinion. And when we talk about, ooh, hello, I know, Q3 for Bitcoin, it's green for once. Obviously, Ethereum's looking like cack. What's interesting is the fact that when it's usually green in September, which it currently at the moment is for Bitcoin, we tend to have a really good Q4. If we are going to continue that, and we've only got, what, I don't know, a week left essentially to decide this fate, it could be a very interesting winter leading into the elections and going into a very strong, very, very strong Q1. Now look at this, right? You got green, 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 green. You had 6 months of green, and then we had one red, green, red, green. You know, it has actually been very, very strong. Are we going to continue that growth, have a Santa rally, and continue going higher? Possibly, because the cycle narrative could be telling us that, well, what if we are going to end at a certain point? I'll go back to that tweet in a minute and put it on the chart. Now, the thing that I want to talk about is kind of obvious, and I tweeted about it. We've got to look at certain metrics. Now, this is from Ben Cohen regarding, obviously, YouTubers. My favorite people. I know. The rates of, in my opinion, personal opinion, of course, views are very low. They are very low. We had this spike, and you've seen the spike in my channel at the start of this video, right? We've got to look at the date and the time frames and all that kind of stuff. And some people genuinely don't even post many YouTube videos now, which is kind of interesting. So some of these I would probably argue need to change and be more different people. But the reality is obvious. When the herd come back, it gets very interesting. And I added to this, right? And I said, the Coinbase ranking on the iPhone store or Google store, right? People who talk about crypto, you got to be mindful of that. What do people say? Are they telling people to buy? What do people do? Are they refinancing their house or getting loans to buy crypto? I mean, that's just stupid behavior. You know, they're all great indicators. They are, because we might be really, we might be at that point where, you know what, this is where it starts to really ramp, and then we get a similar element of the start of 2024 where it went a bit crazy for a bit. But it might go even further than that, which could be very, very interesting. Now, we've got, obviously, there's a load of if, buts, and maybes here, and I know it's very, very early. But I think it's important to note that when we talk about timeframes and dates and stuff like that, and we talk about how everyone flips, and then how, you know, we have got to look at essentially, you know, 480 days after halving. Where will that date give us? And it makes you wonder why. Let's have a little look at that date. So the 19th of April 2024 was Bitcoin halving. That would lead us to a point of the 12th of August 2025, which is really interesting. It really is interesting when we go about this, because I think it's important to note. We've got to look at the fact that obviously that is 480 days from halving. Cool. We were at an all-time high. And again, when we talk about 100 days roughly from our halving, we're roughly the same sort of price, which is fair enough. Fair dues. The biggest problem we have got, well, where do we go from here? And this is going to be very, very, very important to know. When we talk about this, that time frame seems really interesting, right? Because let me just show you something. I think this is important to note as well. Bear with me. Many moons ago, I did a video on this. Is my opinion of like cycle starts from breakouts of key levels, utilizing the obvious, right? This is kind of like where we are right now, obviously. And I put 595 days randomly from roughly, give or take, around all the levels, right? From in between these, I was 609. This was 496. And looking at certain levels. Now, obviously, this is only for June. The reason why I've kind of picked in the middle is just because it kind of made sense in my eyes between that one not being too far away and that one kind of in the middle. When we look at this, we could go a bit further back, but again, we don't know when it's going to actually end. But if we are looking for a ballpark figure between June and August and September, it's nothing too crazy away from the previous altcoin market runs or the Bitcoin cycle runs, right? It might be a bit earlier, but realistically, if we're talking 6 to 9 months and we're much higher, you probably should be taking some profit off the table, because that all marries up with the halving. It all marries up with the past as well, right? In terms of previous cycles. So obviously the previous cycle here, in terms of this, the reason why I've done it from this point is because obviously when structure broke, right? Obviously. So that was 496. And this was an this one was more of an interesting one because obviously we had COVID crash. So you could argue that it was already started much, much earlier, which some people do indicate, which we could look at that. We could look at that being a lot earlier from this point here. And obviously we had that big ugly correction. It depends on how you want to look at it. You could probably argue from there realistically, right? So you're looking 572. There's so many metrics here you can look at. And roughly, they are kind of around that 500 to 600 day mark. That would indicate, well, what about where do we go from here? Well, if we are going to go to August, which was roughly, was it August? Yeah, it was. Roughly about there. Not too far away from where the original, well, the previous bull markets were. And as I've alluded to it, right, if we are going to go a little bit earlier and look at that previous breakout here, roughly not long after COVID happened, or actually probably about there, that's still 600 days. So on the basis mark, most Bitcoin cycles last about 600 days, give or take, depending on how strict you are with your rulings, right? Some argue maybe earlier. COVID kind of distorted it a lot. So in my viewpoint, when we're looking at the technicals and looking at the jargon, you know, we could be looking at this kind of summary levels where we should realistically be like, well, you know what? If we bought at like stupid levels, at the lows, why are you not taking profits? And it's important. It's all psychological, I know, right? People are going to be like, what are you on about? If you buy late, you want to hold for as much as you possibly can to milk the cow and get as much juice out as possible, right? You want to squeeze the lemon. When you are early, you probably don't care as much, right? Look at the psychological factor, right? If you bought at these 2023 lows and you are like, whatever, you know, if we're $3 to $4 to $5 trillion in terms of overall total market cap and we're at that level, I'd be quite happily taking profit. And you'd be right to do so. You would be right to do so, right? But as I've alluded to it, it's the people that arrive late at these fucking stupid levels and they're like, oh, but we're going to go up to the moon. You know, you see the meme of like, I just want like, you know, you've got a 10x, but it could do another 10x sort of vibe, right? It's that sort of situation. So we need to look at that. But yeah, the reason why I'm a little bit skeptical of all of this, and I'm going to talk about it, is because we, right this second, this is Bitcoin, as you can see, there we go, zoom in for you. We are at a point of levels of resistance where we need to break this level and get above it and be a bit more happy. We may well correct first. Let me just remove the graphic first. We may well correct first, create some nice little liquidity around here, then continue going higher. This is the thing. That tweet, oh, everyone's bullish. And they are, right? But realistically, longer term game, if you go on to the higher time frames, you can see very, very clearly, once we break out that level, we could well be hurtling towards some new upside moves. Bitcoin, in my opinion, will move much further first. It always does. The reason why I've talked about that is obviously because Bitcoin dominance currently is at a really interesting level. It's all the way up here. It's freaking miles away. It's absolutely flying. But eventually that will correct and money will rotate over. Ethereum dominance is really struggling, properly struggling. It's like, oh my God. And this is why I laugh at that, like that article going, oh, but Ethereum's outperforming Bitcoin. It really fucking isn't. You know, Total 3/BTC is still in a horrendous downtrend. This might be the bottom, but we need to break, in my opinion, this sort of level needs to break. We need to get a crossover on the EMAs. We need to get above that level and start going that way. Prior price in terms of like the start of this year, by the way, this move up, everyone was like, way, we're amazing. We can't hardly see it on the chart. It's so much potential here. There really is so much potential. And this could be the bottom. Scary, I know. The stable currencies are somewhat getting to a point of interest where it might well reject and go lower. This, by the way, if this goes lower, it's good because the dominance of stable currencies is lower, therefore more money is in the market elsewhere, right? And as I've alluded to it, we're here. We need to break this level of structure. We are still early, boys and girls. We really are still early. So as much as this is quite a bullish video in terms of like, what if you were early, right? There will be people that will return to this market when we're way above this level. We're at $3, $4, $5 trillion. When people are genuinely talking to you again and messaging you on whatever, who you've not spoken to for years, will be telling you, oh, but we're going to go to the moon. What? And you've been buying 3-4 years ago. Hey, winner, chicken dinner. There's all kinds happening. Even the likes of, you know, when we look at NIA, for example, right? NIA protocol is showing signs of bottoming, where again, we break levels of structure like this, you're going to start getting a little bit more excited about altcoins. And it's the same with a lot of altcoins right now. they are trying to break up beyond previous levels because we've been in a honking downtrend on the weekly time frame, 3-day time frame, showing a lot more promise. It feels like we're getting there, but we're not there yet, right? So try not to dive in on resistance. Wait for a clear break. Wait for the sign and the ignition to go. And then we may well start seeing some positive price action into Q4. And then we may well start to roll uphill, hopefully fingers crossed, like a snowball, and things get very interesting. But as I've alluded to it, right, Bitcoin has to break some of these levels. Some of these levels need to break. And then we need to run with momentum. And then the liquidity needs to return. People need to get off their flamingos in the beach and return to the markets. And then things might get very, very, very interesting. The final thing I want to talk about, though, and I know not many people are interested, but the S&P 500, where have we gone here, is at all-time highs. It's massive, I know. That is ridiculous. The biggest worry that I have, and it goes back to my previous video, was a 50 basis point rate cut on the S&P 500 is often shown, in the last 2 times anyways, a recession. .com bubble and the 2007 to 2009 financial market crash. I hope we don't repeat, but if we do repeat, Bitcoin could well be a very good risk asset, a wealth preservation tactic for a lot of institutions. Then, as I say, bring in the retail investments into that could be very interesting if it pumps hard enough. I will finish on the basis point of obvious. I've talked about it many times. If Bitcoin is silly enough to do it, it will do it. We may well scare people. The scary thought is that level down to this swing low to $83,000 could well be the trigger point for mass retail to go absolutely berserk. It happened here. It may well happen here. This run from the low to the high is a massive run. That isn't even coloured. That is so annoying. There you go. You get the idea. So be mindful of it. You may well be caught off guard.